So we have a specific way of renaming documents, and I'm going to start sharing my computer with you. Can you see my screens? So actually just pull up an email from one that we got yesterday. So this is the first email that this loan officer sent us. It kind of explains what the scenario is. Sorry. And these are all the documents that he sent us, right?
Mhm.
So just doing a quick screen view of the document. So this one here is our application. We have a mortgage statement. We have bank statements, actually quite a few bank statements, but if you can see, they're all labeled, not how we have them labeled when the documents that I forwarded you previously, right?
Right.
We would download these documents and then we would just rename them when we save them into our folder. So this one right here. So these are the documents already renamed that we have, that we received from the email, his initial email. We have in our Notion, I have this separately, but we do have it on Notion on exactly how to rename the documents. Okay, and we did kind of just break down the different types of documents that we have. So we have our authorization forms. And this one, I don't think we have any authorization forms. And we have this credit card authorization here. Okay, so we have our asset documents. So all our asset documents, it's going to be anything where it's going to be a bank statement for checking, savings, retirements, 401k plans, pensions, anything that shows that our borrowers have the money to buy the property that they're trying to buy, right? Or their
Mhm.
payment or their closing cost. This one in particular is going to be a bank statement loan. So that's why we have so many bank statements, because we do have to get 12 months of each account that they're going to use to calculate the income. So
Mhm.
that's the reason why this one in particular has several bank statements on our file. So the way to rename these bank statements is going to be bank statement underscore the bank name. So for these, they're Wells Fargo accounts, as we saw previously. We would put Wells Fargo, and also we're doing, let me see, we're going to put the account name, or I'm sorry, not the account name, the bank name and the account numbers, the last four of the account numbers. So this one's going to be 0794, and this one has two of them, so it's going to be the savings 5915, and we're going to separate each account by an underscore. We're going to put the date of the ending date for the statement. So in this case, it's going to be March 31st. So 31/24. And then we're going to put the name of the account holder. In this case, it is a business account. So we're going to put the business names. If
Mhm.
it was the actual borrower's name, we would put the borrower's, let's see, like this one, Rebecca, right?
Yes.
Any questions so far?
None so far.
No? Okay. Moving on, we have our income documents. In this case, this, like I said, this one is the way we're calculating the income is through the bank statements. So we don't have separate income documents. But if they were a W-2 employee where they got pay stubs and W-2s, we would put pay stubs, the name for the company that they're working at. So in this case, like let's say the Apple, what is it? Apple Healthcare Inc., right? So we
Mhm.
would put pay stubs underscore Apple Healthcare Inc. underscore, and then the ending pay period. So I'm gonna pull up some pay stubs real quick so that you can see the difference. So there's the pay stubs have several dates on here, and these dates are actually pretty important. So this pay stub in particular, they're getting paid for from May 6th to May 19th, but they're not receiving their check until May 24th. So
Mhm.
this document should be labeled, oops, sorry. It's, as you can see, it's going to be pay stubs, and it's for In and Out. That's the company name, underscore 519, which is the ending period date. And then we're putting the borrower's name.
I see. So for, let's say, if indicated on the pay stub that it will not be credited until a certain date, we will still um go to the payment as a reference there, not the credit date, right?
Yeah, so it's not the date that it was issued or paid to them, but the last pay day.
Okay. All
So
right.
this payday is the last day their check. So you get your pay stub for each week, right? But you probably don't get your pay stub till like a few days after the end of the week,
Correct.
right? So you're gonna put your last day actually working for that pay period.
Okay, got it.
Okay. We also sometimes for pay stubs we require year-end pay stubs. So if they get any bonuses, overtime, commission for all income, we do have to verify that they get that income for minimum 2 years, right? So in order for us to be able to include that income in their to help them qualify, we do have to verify that they've received it for the last 2 years. So it's going to be labeled very much the same. We're going to put the pay stub name, the ending date, and then we're also going to put the year. So this one should be labeled. So for example, so for one, right? If it was this one, it would have been underscore and then 2024.
Mhm.
Okay, that's the only thing we're adding to it. So now, because for now we should be getting 2022 and 2023 and year pay stubs. So that's the only difference that we're adding onto our year-end pay stubs. It's just the year by itself. Then we have our W-2s. So we'll do W-2 and then the year that W-2 is for. So in this case, any W-2s should be W-2 underscore 2023 or 2022, the name of the company, and the borrower's name. Okay, same thing goes for our 1099s. So the difference between our W-2, I'll show you what a W-2 looks like. The difference between this W-2 and a 1099, very similar. Only difference here, this one's actually not the best one to show. Let's see. So this 1099. So you can see, kind of just looking at it, it's very similar to what a W-2 would look like, right?
Right.
The only difference here obviously is the name. We have the 1099 versus the W-2 form.
Mhm.
But our W-2 form is for our employees that receives pay stubs. They're either hourly salary. Our 1099 here is going to be for self-employed. Anyone who does not receive a direct pay stub, that they are a contractor, usually construction workers, drivers, they usually get 1099s because they're self-employed. They don't get a direct pay stub from the company itself. Okay.
Right.
Let's see. We have our tax returns here. So we have our self-employed, our W-2s. These 1040s are our personal tax returns. So you're just gonna put the name of the form. So in this case, 1040, the year of the tax return and the borrower's name. These here, right, 1120, 1120s, or 1065, these are tax returns for business. So this is what our tax return looks like. Again, you have the name of the form of the tax return here, and then the year. So this one would be 1040 underscore 2021, and then the borrower's name. Again, these here are for our businesses. It's the same thing. It would look very similar to this one here. The only difference is that the form of the tax return is going to be the correct form right here, one of these. And instead of putting our borrower's name, we're going to put the business name.
All right.
If they get any income for an investment property, we do collect their lease agreement. So again, we would just put lease agreement with the property that's being rented. And you would, it's not on here. It's not, this one's a little outdated, but you would have to put the expiration date of that lease agreement because not all the lease agreements, the first certain period of time. So we do have to put the expiration date in case we need to request updated ones.
See, a lease agreement usually has an expiration date, right?
Yes, they do.
All
Let me
right.
see. So for example, this lease agreement here. So you would just put, well, so this lease agreement here should be lease agreement underscore, and it's going to be for the property address here, this one, right? And then it should have the expiration date. So this was dated as of February 2024. And let's see, if you scroll down, it usually tells us our expiration date, unless it's a month-to-month type of lease. I don't see an expiration on this one, but they usually have the end date for the lease, but you would put the end date here. So for
All right.
example, if it was, today's date, then we would have to require an updated lease agreement. Let's see. Our credit report here, that's pretty. Our credit report, we just label it as CR, the borrower's name. In this case, there's Rebecca and Jocelyn. The date that it was requested or completed, and then whether it was paid by the borrower, which for the most part they are, but sometimes the loan officer will pay for it.
Mhm.
Okay. You won't have to do them because I have to pull them myself, so I'll be labeling. But if there's a credit refresh, we'll just do the same thing. Label it of what it is. So our credit refresh, borrower's name, the date it was pulled, and then again, who paid for it. Our homeowner's insurance on a refinance, it's one of the documents that we require upfront from the borrower.
Right.
So if it's a refinance, we're going to label it as an HOI, property address, and the expiration date. It's the same thing as an EOI. However, we're changing the name for this document once we are updating the lost payee. So in this case, this one, the current bank that holds the loan is this mortgagee here. So once we start working on the file, we submit it, we get our conditions, we're going to update this mortgagee information to our bank name or whoever's bank's name that we're working with on this file.
Mhm.
So once we make this change, that's when we change the label to EOI. Again, the property address and the expiration date. But again, it's going to be the same documents. Now, for our condos and our single family homes, they do have two different policies. Our single family policy is going to be an HO3. You can see it on, well, some forms are easier to find what kind of form it is, and some are a little bit harder. But
HO3 for single family.
single family.
HO6 for
Condos, correct, yes. Let me see. This one doesn't really say it. So for example, this one here is for a condo. It has it right here, HO6. Oops. This one here is going to be for a single family, HO3.
Right.
Now, note that when we have a single family and it's an HO3, we're going to require a replacement cost estimator. So that one, we label it as an RCE. And I'm going to repeat it and say it, not all documents look the same. So we always have to kind of look different wordings to it. So our RCE can be anything that says replacement cost, reconstruction cost, repair cost. So this one here has reconstruction cost. This one here is an email form, but we do have a rebuild cost. This one here, replacement cost. Okay, these are all the same document. It's just, unfortunately, it's different names. So, but we do label it as an RCE underscore and then the subject property. Okay, so this RCE is always going to be needed to be requested when we have an HO3 for single family homes.
Is it for refinance and purchase? It's the same.
Yes, correct. Yeah. When we have a insurance for HO6 for condominiums, we don't require this replacement cost estimator. However, we do require a master insurance. Okay. This master insurance, it's very similar to the personal insurance here. The only difference here is that our insured is going to be the name of the HOA here versus our HO6, our insured is our borrower. And again, this master insurance will be needed once for purchase or refinance. This master insurance as well needs to have the lost payee updated to reflect our bank name or whoever bank's name we're working with.
That's for both, or
No. So this master insurance
right?
needs to be, it's only going to be required when we have a condominium.
Right.
The
Oh,
lost payee or mortgagee name for the bank information needs to be updated on both the master and the individual's policy.
got it.
Any questions so far?
None so far.
No, it's a lot, I know. And especially you haven't had to rename these, but so on a refinance, we do have to collect the mortgage statement. So when we collect a mortgage statement, like I said, it's only for a refinance or if they have other properties. So if they're purchasing a property, but they own another investment home or their primary home, they already own a home, we do have to collect this mortgage statement as well as the homeowner's insurance for any properties that they own. Usually we collect it on a refinance because they're trying to refinance that property that they own, right? So the way we label it is the mortgage statement, property address, and then the due date. So for the most part, you can see it looks like a statement, right? But for the most part, it will have the bank's name here, mortgage, and then we're going to do the due date. So this statement in particular is going to be due next month, but so they received this statement way before, right? So usually they do have, oh, right here. This mortgage statement was dated of 7/3. We want to use this date right here.
The due date.
Correct, yes. Okay. We do have HELOC statements, or if they have a second lien, then we would just put whether it's a HELOC statement or we would, if it's a mortgage statement for a second lien, we would just add second lien. On a condominium, we do also require for them to have their HOA statement because they pay monthly dues on their homeowners association. We do require that statement as well. And then on that one, it's very similar. We just put what kind of statement it is, subject property, and the date of the statement. So this statement here would be the 15th, January 15th. Okay. Their identification documents, it's just the type of document that it is. So in this case, a driver's license, passport, U.S. birth certificate or visa, or the employment authorization card. And then we just put the borrower's name on the visas and the employment authorization cards because those are time and date sensitive because they have an expiration date. We want to put that expiration date on there as well. Okay. I think going on to our escrow documents, which are fairly important, our contracts or purchases. We do get the purchase contract. We label it as RPA. Why is it working? There we go. We're going to put the RPA and then property address and the date they signed. So any documents that we get that are regarding purchase contracts, we're always going to put the date that it was signed. We do have an addendum. We do have counter offers. So in this case, so as you can see here, we have the SCO. So this is the purchase contract in itself. We have a seller counter offer. So the RPA, it's going to be SCO, the number. So these counter offers can be more than one. So we always want to put what number this counter offer is, the property address, and again, the date it was signed. So this seller counter offer, we have a buyer counter offer. So it's going to be BCO, and again, the number. We have addendums. Oh, not this. That's not the addendum. This addendum right here. So addendum, and then the number. And then usually on the addendums, we specify what this addendum is for. So in this case, it was to correct the property address here. The agreement came in as 963 Baxter, but the right address should be 963 Baxter Parkway. So that's what this addendum was for, to update that. We do have addendums that they're offering them credit. So in this case, this addendum here specified the credit here. Let me see, right here, seller credit of 20,000. Any questions?
Like for the other addendum, or should we just rename it as RPA addendum and then update of address or correction of address?
Yeah, so this one would have been, so like RPA addendum number 2, and then address corrected, and then the actual address and the date it was signed.
Right.
So like this one, regarding the seller credit, it's RPA addendum, the seller credit, the amount of a seller credit, property address. This one here is missing the date it was signed, but it should have the date that it was signed.
Got it.
We have quite a bit, but I'm just going to finish going through the escrow documents here that we need on. So our usually opening package, whether it's a refinance or purchase, we require the settlement statement to confirm title and escrow fees. So that settlement statement is very important in order for us to be able to submit the file to the actual lender, to the bank. We do need to have this, right? So we can't submit it without it because we do need to, because the fees are fairly important, and due to compliance issue, we can't, once it's been submitted, we can't just change the fee and increase it. We could always decrease it, but we can't increase it, right?
Right.
So on a purchase, we're going to have a master settlement statement and a buyer's settlement statement. So in this case, it's our master here, and let's see, want to do the same. I'm gonna do the same subject property. So this one. So we have a buyer ESS and a master ESS. As you can see, they look very similar. We do have them labeled differently. One's our master, one's our buyers. It's for the same property here, 963 Baxter Parkway. The difference is when you're looking at it is obviously it's in the name. It does specify it already for us.
Right.
But if you just skim through it and you don't really read it, because I've done that. I just open documents and I don't really skim. I just kind of skim through it. We do have the difference here for our master. It's going to have our seller fees
Right.
and our buyer fees.
Correct.
On the buyer settlement statement, it's only going to have our buyer fees. So as you can see, these fees here should match this side of our buyer's fees. On when it's a refinance, we're only going to get this buyer settlement statement, but we don't label it as a buyer settlement statement. We just label it as ESS. So we only put buyer ESS when it's a purchase.
Right.
Okay.
That's buyer and master for purchase. Right. Gotcha.
Okay. And then other than that, these are additional documents that we get from escrow that are for purchases, which would be the prelim, our escrow instructions, our EMDs if it's a purchase. So these other documents, they are required usually at submission, but are not time sensitive to be needed to be submitted. If that makes any sense. I think I confused myself. So in order for us to be able to actually submit the file, those documents that I mentioned previously, we don't need them to submit the file, but we will eventually need it for the file to proceed and get our conditions and get everything reviewed. Versus a settlement statement, we do require it upfront from escrow in order for us to actually be able to submit the file. Any questions?
And so far,
No. So there are more documents, as you can see, but I think I went over most of the important ones. Like I said, how to label it is on Notion. I'm not sure if you have access to it, but
yeah,
if you were to have to start renaming documents, you would be able to view something similar to the page I have.
right. I was actually about to ask where to get that. Is it under disclosure desk or under?
It's probably going to be under processor. I don't
Processor
think it'll be under disclosures.
Let me check processor board here.
Okay, so processor board.
Yeah, it's here.
Yeah, you have it?
Yes.
Okay. Yeah,
So-
how to label docs.
So this will be my reference then.
Yes.
This is a lot.
I know it's a lot. And unfortunately, as I've mentioned to the girls, not all documents look the same.
Right.